So, hi friends. Now it's been a long time since I've made a video on commerce related issue, right? Commerce related topics. So now I'm back with another video on commerce. So it's useful for students studying BCom, MCom, any professional courses like CA, CS, CWA, ACCA, etc. Right, guys? So as you can see from the name of the video, title of the video itself, it's a very important concept. It's really important even for guys who are doing MBA as well. So that's the reason. Now, without wasting any further time, let's get into this video. Hi, friends. So this is PK sir, and let's start. So the topic is concept of absorption, right, guys? Now, what is this concept of absorption? Let's try to understand the basics, and then we'll move on. First of all, see, costing is a continuous process, unlike your financial accounting. Costing starts from day one of your financial year, let's say April 1st, for your understanding. From April 1st itself, you have to fix selling price and you have to start selling goods, which means you will manufacture and sell goods from day one itself. Unlike your financial accounting, which is generally all the financial statements are prepared at the end of the year, when it comes to costing, everything will happen from day one. Okay. As a result, if you need to fix selling price, then most of the times you need to know what's your total cost per unit. Based on that, you'll add profit margin and you'll fix selling price. But to know total cost per unit, it is made up of two elements. One is direct cost per unit and the other one is indirect cost per unit. The other name for indirect cost is overhead cost per unit. Unfortunately, to find this overhead cost per unit, we should know what our actual overheads are. But you will not know what your actual overheads are at the beginning of the year. You will know what your actual overheads are only at the end of the year. So which means you have to wait till end of the year to know what's your actual overheads are. Thereby at the end of the year find overhead cost per unit. Thereby add it to direct cost per unit, find total cost per unit. Thereby add profit margin, fix selling price and do business. So it is practically not possible, right? We can't wait till the end of the year, isn't it? So therefore, the only choice that we are left out with, go for budgeted overheads. Are you able to get me? So when you cannot find out what your actual overheads are, and practically speaking, you can't wait till the end of the year to know what's your actual overheads, thereby finding out total cost per unit, thereby fixing selling price. So practically it can't happen. Therefore, you go with something called budgeted overheads or expected overheads. When I don't know what my actuals are, the only choice for me left is to go with expectation or budgeted overheads. Okay, guys. So from this, what we can do is that we will have three types of overheads. One is budgeted overheads, the other one is absorbed overheads, and the third one is actual overheads. Right, guys? So absorbed overheads can also be called as standard overheads in some books. Okay, it has got different names. We'll see all the names. So first what will happen, you will expect your overheads. Let's say your budgeted overheads for this whole year is 1,20,000 rupees, right? And let's say similarly you have budgeted your output also, which is 12,000 units. Now if you divide your budgeted overheads divided by budgeted output, you'll get standard rate per unit, which is 10 per unit in this example. The standard rate can also be called as budgeted rate. It can also be called as absorption rate. It can also be called as recovery rate. It can also be called as predetermined rate. So you ensure that you know all these names because it's useful while you're solving problems to know all the names, because you can give any name. Similarly, it can be called as absorbed overheads or standard overheads or recovered overheads. You got it? Now here I've chosen one method out of 6 different types of overhead absorption rates. So if you're familiar with overheads chapter, in overheads chapter, there are 6 different types of overhead absorption rates. One is based on material cost, second one is based on labor cost, third one is based on prime cost, fourth one is machine hours, fifth one is labor hours method, and the last one is production method, or we can call it as units. So totally you've got six different types of overhead absorption rates. Based on material cost, you can observe your overheads. Based on labor cost, you can observe your overhead. Based on prime cost, you can observe your overhead. Based on material hours, you can observe your overhead. Based on labor hours also, based on units. So how will you select a method out of these six different types of overhead absorption rates? Based on predominant influencing factor. Based on predominant influencing factor, you will choose one of these six different types of absorption rates. Now the next question is, what do you mean by predominant influencing factor? Let's say there is a department called capital intensive department. Let's say there is a capital intensive department. From the name itself, you can understand. What do you mean by capital intensive department? More machines will be there in this department. So when there is a lot of machines in a department, then obviously what is the predominant influencing factor in that department? Machine. So I'll be using machine absorption rate. Suppose there is labor intensive department. From the name itself, you can understand that the majority will be what? Labor, which means labor hours will be the predominant influencing factor. So like this, out of the six methods, you can identify which is the predominant influencing factor in that particular department, and based on that, you can select whether you need to go for machine hours rate method, or labor hours, or prime cost, or labor cost, or material cost, or production units method. In this, in the example which I'm trying to explain you here, so I went with this method, right? Production units method. Okay, out of these six methods, I've chosen which method, Nana? Production units method. And that is the reason here I've divided with budgeted output. Otherwise, if it is a labor intensive department and you would have chosen labor hours, then you would have divided with labor hours, budgeted labor hours. Then it would have been standard rate per labor hour or labor hour rate. Otherwise, you could have divided with machine hours also. Then it would have been machine hour rate. Are you able to get me? So budgeted machine hours or budgeted labor hours or budgeted output. So I have chosen this particular method. Therefore, I went with this. So all these things will be done before your financial year starts. So now let's say your financial year has started. Now just try to imagine. Okay, just try to imagine. Say on day one, that is April 1st, you have actually manufactured 50 units. For each unit, you will observe how much? 10 rupees, because 10 rupees is the absorption rate. So which means you would have observed how much? 500 rupees on day one. Observed means you can imagine that it's as good as debit in costing P&L account. Okay. Next, April 2nd. Let's say you have actually manufactured 70 units. Now for each unit you need to observe 10 rupees. So which means you would have observed how much? 700 rupee of overheads. Similarly on day 3, let's say you have manufactured 40 units. Just example, okay, just imagine. You need to observe 10 rupees per unit. So you would have observed how much? 400. So like that, you will do the same for how many days? 365 days. And after 365 days, let's say your actual production is 11,000 units, and you would have observed 10 rupees per unit. So which means totally you have observed how much? Yeah, 1,10,000 is the observed overheads. Now because 365 days has completed, which means you have come to the end of the year. So once you have come to the end of the year, you know what's your actual overheads are. So let's say your actual overheads is 1,30,000 rupees. Okay. So now what happens? You compare this observed overheads with actual overheads. You compare this observed overheads with what, Nana? Actual overheads, right? So if you compare, what do you understand here? This is what you should have debited in costing P&L account, or this is what you should have observed. So this is what you should have observed, or this is what you should have debited in costing P&L account. How much? 1,30,000 is your actual overheads, which is what you should have observed, or which is what you should have debited in costing P&L account. But how much you have debited? 1,10,000. How much you have observed? 1,10,000, which means you have under observed or over observed? Under observed. So under absorption of how much? 20,000 rupees. Are you able to get me? Suppose here the number would have been 1,50,000. 1,50,000 is what you would have observed. And the actual is 1,30,000, which means you should have debited 1,30,000, which means the actual is the correct one. So you should have debited 1,30,000, but you have debited only 1 lakh. I mean, sorry, you have debited 1,50,000. You should have observed 1,30,000, but you have observed 1,50,000, which means you have observed more. Which means in that case, it will be over absorption of 20,000. Are you able to get me? Right. I hope now you got the concept of absorption. Now let's try to understand what happens when there is over absorption as well as under absorption. Okay, so let's start with over absorption. Over absorption means what? Absorbed overheads is 1,50,000 for example, and actual overheads is 1,25,000 for example, which means you should have observed or debited this much, that is 1,25,000 in your costing P&L account, whereas you have observed how much? 1,50,000, or you have debited 1,50,000. So which means you have debited more, or over absorption of how much? 25,000. So when you have over absorption of debited, I mean over absorption of 25,000, or you have debited more, what would have happened to your profit? Profit would have got reduced. So this reduced profit is correct profit or wrong profit? Wrong profit. So which means I need to correct this. How to correct this? Add, because it has got reduced. So you need to add what? Over absorption to rectify the error in profit. Are you able to get me? Similarly, coming on to under absorption, let's take an example. So absorbed overheads in case of under absorption is 1,20,000. Just for example purpose, actual overheads, let's say, okay, 1,42,000. So which means you should have debited or observed 1,42,000, but you have actually observed or debited 1,20,000. So there is under absorption of how much? 22,000, or you have debited less in your costing P&L account. So your profit would have got increased. The increased profit is correct profit or wrong profit? Wrong profit. So we need to correct this, which means we need to less. So less what? Under absorption to rectify the profit. Are you able to get me, guys? So it's very simple, right, Nana? So chalo. So that's it, guys. I hope you have enjoyed this video of concept of absorption, right? So if you have really enjoyed this video, then please like the video and comment. And commenting is very important, guys, because I want to know how you guys feel. Okay, then only I'll know whether you are appreciating my effort or not. And subscribe to my channel if you have not subscribed. So this is PK sir signing off, guys, and all the best for you. Jai Hind.